When was the last time you went for your annual physical checkup? You probably have it on your calendar. And even if you don't, you have it in your head that it's something that needs to get done each year. Now, let me ask you this. When was the last time you did the same thing for your money and finance? Hi, my name is Yulin Lee. As a woman in midlife, I have gone through several personal transformations myself. And now, as a money empowerment coach and a spiritual mentor, I help other women in midlife who are at the intersection where life is shifting and that money starts to matter in a different way. I provide education and coaching to these women to help them get clear on exactly what they want from life going forward and how to build real wealth to fund their dreams. And most importantly, to build the confidence so that they can trust themselves in making sound, smart financial decisions and forging their own path. And in this episode, I'm going to show you how to do a complete financial checkup. Why do we need that? Well, for the same reason why we do our annual physical checkup. These regular maintenance can help catch problem early on, prevent disasters, and also minimize surprises. And the steps I'm about to show you are specifically designed for women like you in your 40s and 50s, where every decision we make now will have a huge impact on how we're going to live out the next chapter of our lives. We're going to go through 6 areas, the 6 vital signs of your financial health. And just like the physical checkup, we're not looking for perfection. What we're looking for is clarity. And we're also looking for things that we may need to start paying more attention to before they become problems. So now grab a pen and paper. Let's go. Now, if you think about a physical checkup, there are specific vital signs your doctor will look for. Things like your weight, your blood pressure, your glucose level, your cholesterol level, and etc. These are the basic vital signs that will tell the doctor your overall health condition. Same thing with your wealth. There are 6 vital signs that should be checked every single year. And here they are. Vital sign number 1, your net worth. The first thing your financial doctor is going to look at is the overall picture, not just one symptom. And in finance, it's your net worth. Most women I work with, they've never calculated this. They have a vague sense that I think I'm doing okay. But they actually never looked at what is their net worth or calculated that number. Here's the thing. You cannot navigate towards financial freedom if you don't know your numbers. Because when you don't know your numbers, how would you even know that you have arrived? So how do you figure out what is your net worth? You add up all of the assets that you own. So things like your home, your car, your boat, if you have a boat, anything that you own in your possession that's under your name, assets, right? And you add them up, you have a total assets. And then on the other column is your liabilities. So liabilities are the things that you owe. So things like mortgage, home equity line of credit, car loans, personal loans, credit card debts. And you add all of these liabilities together. And then you take total assets minus total liability. That is your net worth. This is your baseline. And we check it every year. And the goal is to see that number grow over time. That's the ultimate test for moving towards your financial freedom. Vital sign number 2, cash flow. Think of this as your blood pressure check. Money comes in, money goes out. When there's a positive cash flow, that means there's more coming in than going out. And vice versa. If there's more going out than coming in, then we call it negative cash flow. So this check is about making sure that there's a healthy flow of money, meaning we have positive cash flow. Or if there is something that's quietly draining you, then we want to know that as soon as possible so we can stop the leak. A lot of women at this stage are making good money, but they can't tell you where it all goes. And here's one thing not a lot of people talk about, and that is women in your state, let's say in your 40s and 50s, on one hand, you are probably still supporting your young adult children, whether it's through tuition, rent, or cars, whatever else that they may still need support on. And on the other hand, you may be starting to support your aging parents. And that could be additional expenses on your part to support them through grocery or medical expenses or whatever else that they need in terms of care. That is the sandwich generation reality. It's one of the biggest invisible drain on wealth building. Knowing these numbers will really help you plan for the next chapter of your life as you're navigating through the current phase, so that you're not just going to wait until I'll figure out when I get there. Vital sign number 3, retirement readiness. This is probably one of the most important vital signs because time is one of those things that we just cannot manufacture more of. So here's a question. Do you know your actual retirement numbers? Now, you may have retirement accounts where you have put money aside for 401k or your IRA, your SEP IRA, or your Roth IRA. So in your mind, you may be saying to yourself, I think I'm doing okay because I've got money in those accounts. But what most people don't ask is this, is what you have done enough for you to retire in? And in order to answer that question, you must know the numbers. So how much money do you have in those accounts? And what kind of returns is your money getting from being invested in the market? Most people, when I ask this question, they don't know the answer. They would tell me, I think it's doing great because when I look at the statements, the balances seem to have gone up. And I say, great, okay. So when you find out exactly what the percentage is, then we can determine whether it has been doing great or not. So for example, let's say if your overall account has gone up 7% last year. Now, when you just look at that in itself, you said, oh, well, it's not too bad because at least it's beating inflation, even though we've been told that the inflation has been around 3% plus or minus, but it sure feels a lot like 10% or more in our day-to-day life if I look at my grocery bills or shopping, or dinner or restaurant bills. But in any case, you might think that, 7% is better than our current inflation rate, so I'm doing great. But what if I told you that S&P 500 in 2025 returned between 16 to 17%? Now, with that reference, with that benchmark, how does your 7% sound now? Right? So here are the key things. Like, we need to understand what are the key questions to ask and what are the key metrics to use in order to determine whether our money has been working hard enough for us. Or you may be in the other group where your money hasn't been invested in the market at all because you are too afraid to either give it to someone to manage it for you or for you to do it yourself, to put in the investment market because you don't trust the market and you don't trust yourself. And so what happens is your money is just sitting in the savings account earning anywhere between nothing to maybe 3%. And if that's you, then let me tell you, you are literally losing money every single year purely due to inflation. And here's one more thing. If you are one of those women who are currently being the sandwich generation, where you are still supporting your children as well as supporting your aging parents, obviously you are putting less away for your own retirement because you have all the other obligations. This is another reason why it is so critical to make sure that with the amount of money that we can put aside to build for our own retirement future, that it's working as hard as it can for you. Vital sign number 4, protection and risk. This is your financial immune system. A good checkup looks at your resilience, not just the current state of health. This is about helping to prepare you for if and when something goes wrong. And there are 3 things in this particular check. Number 1 is your freedom fund. Number 2 is insurance. And number 3 is estate planning. Now, let's break them down into each of them. Your freedom fund. Most people call it the emergency fund, but I like to call it the freedom fund because by having that fund set aside, you literally have the freedom to not panic when something happens. Let's think back a few years ago when COVID happened. So many families got put into this really, really stressful condition, probably because they didn't really have that much money set aside for something like that happen when you all of a sudden not have your income anymore. The most common advice you would hear in the financial world, they would tell you 3 to 6 month reserve of your monthly living expenses. Personally, I would advise for minimum 6 month, but ideally 12 month worth of your living expenses. If you have nothing right now, set a goal for 3 months first. Once you reach 3 months, you work towards 6 months. When you have 6 months, you work towards 12 months. And then once you have that for a whole year, then you're good. right? You don't have to keep building. Now, it's 12 months of living expenses, which also means you do need to do some budgeting to know exactly what is your living expenses on a monthly basis. And then the other key thing is to set that money aside, separate from your regular checking, that it's stored away somewhere in a different account, earning enough, at least minimally, interest to keep up with inflation. But it's also not something that's locked up that you cannot access to if you need to access it. This is your financial stability foundation. It's kind of like the foundation in your house. And by having that foundation laid down, then the rest of your financial life becomes so much more stable. And literally, I will tell you, by having this in place, it will eliminate a lot of the stress you may be experiencing around money. Number 2, your insurance. Beyond the typical insurance for health, dental, and eyes, for women in midlife, we should also start to think about long-term disability insurance as well as long-term care. And that is something that all of us need to deal with. So if you don't have that in place, definitely talk to a professional. Sometimes we tend to put these things off and then we realize it until it's too late. So you want to make sure that you don't get caught in those situations. Number 3, estate planning. Do you have a trust? Or minimally, do you have a will? Do you have a health directive in place? What about the beneficiaries on all of your accounts? Are they updated? I have heard cases where people have gone through a divorce, but they didn't go through the updating of the beneficiaries, and then they end up having their ex still being the beneficiary on their accounts. So you don't want that. Vital sign number 5, important money conversations. Now, this is the one thing that doesn't show up on any of the other financial planning checklists, but it may be one of the most impactful and practical things that you can do. Because if you're in the sandwich generation, supporting both your children as well as your parents, this money conversation can be just as important as money itself. Now, let's break it down and talk about conversations with your young adult children. So here's a question. Are you having honest conversations about money with your young adult children? Are you being open and honest with them about the level of support that you can give them and for how long? What I see is that a lot of moms quietly absorb the financial pressures because they don't want to burden their kids. They feel that their kids deserve all the best in the world. They also see that as an expression of love. But sometimes that actually may not be the best thing for them. Because at some point, they need to learn how to be independent. And in that process, for them to learn to be independent, that's how they build confidence for themselves. So sometimes when we give them too much protection, it actually takes the opportunity away from them for building their own confidence and competence around money. And they also need to understand that you're supporting them is at the cost of your own retirement preparation, if that were the case. Because you know what? You may think, with all the things you do, all the sacrifices you make for them, that they would know, that they would understand. But the reality is they probably don't. And because they're now adults, that conversation needs to happen and they really do need to understand the reality as they are. Now, let's talk about your aging parents. Do you know your parents' financial situation? I know for a lot of families, this is a very difficult situation to open up because a lot of parents don't want to talk about it. They either don't want to talk about their financial situation, or they also don't want to talk about what kind of care they would like to have when the day comes when they may not be able to take care of themselves. But still, as hard as it might be, I encourage you to keep trying to open up the subject and really talk about what is it that they want? What is their needs come from? Let them know that this is coming from love and coming from the intention of making sure that they get the best care that they need when they need it. Now, at this point, you might be thinking, I love all your suggestions, but realistically, I don't know how to do it, especially around having money conversations with my kids or my parents, because it's not something that I grew up with. I don't even feel comfortable talking about money in general. And I certainly don't know how to have these very sensitive conversations with my loved ones. If that's you, don't worry, I've got you covered. You can click the link in the description below to schedule a complimentary Discover session. Right now, I have some open spots, but I don't know how long I'm going to be able to do this. So if you're watching this and if this is something that you would like to get some support on, grab one of those available spots right now before they go away. Vital sign number 6, your money mindset. This is the one that traditional financial planning does not address, but it may be one of the most important things on the list for you to do. You could have all the right accounts, the right allocation, and the right plans. But at the end of the day, you still have trouble looking at your bank accounts. You still feel that low level of anxiety every time when you think about money. And you still believe somewhere deep down that wealth is for everyone else but you, or that taking care of yourself first is somehow wrong. So for women in the sandwich generation especially, there can be a very deep belief that your money is everyone else's before it's yours. So ask yourself right now, how do I feel when I think about my finances? Am I an active participant in my financial life? Or have I been a passenger? What's one story that I'm willing to let go right now for myself? Well, there you have it. 6 vital signs that give you peace of mind. I'm also preparing a checklist to help you go through the steps so that it's easier to organize, and also it comes with a few insightful questions. It'll be ready in a few days. I really wanted to get this video out first. So if this is something that you are interested in, be sure to save this video and come back in a week or so, or better yet, subscribe to the channel so you can get notified for all the future content that I'm going to be putting out. Until then, stay abundant.